want to show you the portfolio tool for this. You see at the bottom of the screen, I have this output indicator, and it writes to a text file, which I then import into Microsoft Excel. I have the daily P&Ls for all of my strategies that are imported in, and I reduce the windows to the most recent 3 to 6 months. Otherwise, it would take too much memory, and a lot of these values have been copied and pasted as values. And I do the sums, and I do multiple calculations here, and I get this portfolio tool, which in effect I can just change the number of contracts, and it will update the results. And so we just went over the top stock index trading systems, and we looked at SR counter trend 2, Cobra 3, opening pattern. What does it look like with those? Let's put in SR counter trend 2 as well as SR counter trend 2 V2. It's kind of redundant, so it increases the drawdown. But you see, here are the results. It makes about 18,000 on average per year, hypothetically speaking. These are old systems. These are not new strategies. But this is the portfolio tool that I use in my portfolio analysis for combined equity curves. It's faster than things like Portfolio Backtester or Portfolio Maestro because all the data is there, and you can automatically, if you make a change in those other tools, then you have to rerun the calculation. With this, you can just quickly change it. So for example, if I want to take out, let's go ahead and look at the results, and then I'll show you the example. So for example, here are the results. So 52,800, and then 2017 was down, 2016 was up, and all these other years are up. There's a wide range of results, but 2018 has very nice results. And so let's take a look at, if I just change this, if I take out this, then the results change immediately. You can see what the results are. You can see the equity curve, you can see the drawdown curve. This is typical when you see these long drawdowns when you trade strategies. You can go through seasons of drawdown if you're just trading one market sector and you're trading strategies with big average trade profits. Then you're going to go through multi-month drawdowns. You're going to be trade multiple systems. You're going to go and you can take 10, 15, $20,000 drawdowns when you're trading multiple systems like this in one sector, especially. We're just trading the stock indexes, and so that's why we look for diversity among other markets. But if you just want to focus on stock indexes, this is still a good setup. This isn't, you get a lot of emails. What can I do to make a certain amount of money every day or every month? That's not going to happen. You see, time periods where you're down on the month. You're net down during this time period, minus $6,000 during this time period. That's 1, 2, 3, 4, 5, 6. That's not, a monthly income. If you're looking to replace your monthly income by trading a setup like this, you're not going to do it. That's not what this is for. It's about growing your account over time, and this is one way to take a look at strategies that are old and what they've done. And most people have a hard time enduring these drawdowns if they don't have the capital to do so, or if they expect to make money every month. And so, but this is a good portfolio. These are good results for trading systems, even though you might envision a straight line equity curve. This is I'm going to show you how you can improve this. If you add some of our other strategies like mirror, gap continuation 2B, gap fill 1 from the books, the last two are from the book, you improve that a little bit. Your drawdown goes down 13,545. Your average annuals go up, well, it's 18,504 still. We've removed these two, so let's add these back. And your drawdown goes up when you add that because you get more redundancy. So let's take these back out. And I'm looking at this number right here, total profit over drawdown as percentage. So you get 18,504 with a max drawdown of 13,545, and this is what your equity curves looks like. Your drawdown. This is a 6-month drawdown, about $15,000. Went to a period of time here where we had volatility. We had a run up, and then volatility decreased, and then volatility increased, and so we get this run up. It's not always that way. You get a steady state period here from 2012 through 2016 where you don't have any deep drawdowns. They're within $6,000 or $7,000. That was a nice period. And so in 2017, this would have only made 2160 just trading the stock index. This was a very tough year to make money in stock indexes with algorithmic trading systems with low volatility. But all these other years are pretty decent years. 2011 was kind of low. 2010 was very low. You see that 2008 was nice. You know, there's a lot of volatility there. So while we haven't had the volatility of 2008, um, it's been a better year than 2008 with strategies. So we've had Cobra 3 for a long time. We've had all these strategies for a long time except SR Counter Trend 2. These two strategies are new, fairly new. The concept has been around for several years. This variation was at the beginning of this year, but the other strategies in this portfolio, this one is 1999-2000 time period opening pattern. These are in my 2010 book. Mirror is a few years old. Cobra 3 is a good 12, 13 years old. And so you get strategies that are very old in this. Let's take out SR Counter Trend 2 and see what happens since that's the newest strategy. And so you see the results here. Very low vol, very, let's see, what was this time period? This is a low volatility time period as volatility decreased again and then increased, and so you get this $20,000 drawdown without SR Counter Trend 2. So what you get is 12,850 average trade profit with a max drawdown of 21,000. Still pretty good results considering you're trading you'd need a $28,000 account because these are all day trade strategies, and so this is maximum margin usage, and so you would probably want to measure this against about more of a $100,000 or $200,000 account as a percentage of drawdown versus a $21,000 drawdown over a $28,000 drawdown. That's just the margin you need. Account size requires margin you need, but account size as a percentage of drawdown should be measured against something more along the lines of notional value because you're trading 6 systems, and if they all take a net position, your market position is roughly around 800,000. The market closed at 2764 on the ES, and you multiply that times 6 markets times $50, 50 shares per contract basically, and you're trading $829,000 market value, and so $21,000 drawdown on that is pretty low. And so it's nice to add SR Counter Trend 2 back because that gives us some additional diversity on a wide-ranging counter trend strategy. All the other strategies are trend. Let's see, gap, actually mirror and gap fill are counter trend, but they're based on the open. And so SR Counter Trend 2 is not necessarily based on the open. It's just a pattern intraday that's counter trend. And so you get some diversity in patterns. And with these 8 strategies, you get average annual 18, max drawdown 13, and here are the results again. So these are historical results based on strategies that we have. Again, not new strategies. So that's how you can use the portfolio calculator to calculate the results of a portfolio of strategies very quickly using Excel.